Okay, let's continue with the next presentation with the company P2 Gold. The stage is yours.
Thank you. Hi, I'm Joe Ovsenek, President and CEO of P2 Gold. I'm here to talk to you about our GABS project in Nevada. I'll be making some forward-looking statements throughout my presentation. Well, at P2 Gold, 100% of our focus is on our gold-copper GABS project in Nevada. So for today's presentation, I'll quickly run you through a high-level summary of our GABS project, get into our PEA, which we completed back in May of 2024, and then finish up with a wrap on what we're doing for the coming year. So our GABS project, first and foremost, we're located in Nevada, always a top-tier mining jurisdiction. Great infrastructure. We're about a 2-hour drive on pavement from Reno, about 3.5 hours from Las Vegas. We have water on site, power close to the project. Actually a transmission line running through the property. We've got a great resource, about 3.5 million ounces of gold equivalent, with potential for 4 or 5 million ounces near surface. And I should add, we've recently raised money. We're now fully financed through feasibility. So if GABS is so great, one question we get asked, well, why has it not already been mined, since you can actually drive right through the project on a fairly made road? And the big issue for us, and the real game changer for our GABS project, let's see if I can do it, was the development of the SART process. So there was a lot of work done on GABS in the 80s, early 90s, and the issue there is we have oxide, near surface, it's all oxide, gold, copper. And if you're familiar with heap leaching, you'll know that with oxide, gold, and copper, the copper consumes a lot of cyanide. You can't recover it, and you just makes the project uneconomic. Now, with the development of the SART process in the late 90s, early 2000s, that allowed the development where you could actually recover the copper, so it was a payable, and recycle the cyanide. So that made gold, copper, oxide projects economic, and now there are a number of them in the world today. There's probably 20 out there that are operating. So that's the big game changer for GABS. Now, all the SART process is it's a chemical process where you add sulfur, you add acid, you recover the copper, you add lime, and you recycle the cyanide. So very simple, and as I say, there's a number of these processes working in the world today, and that's the big game changer for GABS. One thing I'd like to point out before we get into our PEA, we announced about a month ago the results of our phase 3 metallurgical program. So if you look on the far left column with numbers, you can see that's our May 2024 preliminary economic assessment recoveries. And so those were the recoveries we used for our preliminary economic assessment. Now, we didn't think those recoveries were really representative of the ore we had, so we did some more metallurgy this last year, and we announced just, like I say, a month ago, these new recoveries. So you can see there's significant increases in the gold and copper. Those are the big payables in our project. So significant increases in the gold and copper payables for our project. So we're in the process of actually updating our PEA. We expect to get that updated PEA out this month. But for now, I'm just going to run you through the economics on our existing PEA. I'll just take a look at, when we put this out back in May of 2024, 1950 gold, 450 copper, that seemed reasonable. So now that's way out of step. So if we just look at the spot case on the far right, you can see that at an NPV 10, at spot prices, we're about 1.2 billion. If we run NPV 15, we're about a 700 million NPV here, and our market cap today is probably about $50–60 million. So there's a real big adjustment needed between our market cap and the value of this project, and it's up to us to bring that out. Simple process. First 5 years, we're mining 9 million tons a year. It's a heap leach, so we grind up the rock down to about a 1/4 inch, put it on the heap, recover the copper with the SART plant, run it through an ADR plant to recover the gold, and then produce a gold doré and a copper concentrate. So that's the first 5 years. The next years 6 through 14.2, pardon me, we're still mining 9 million tons a year, but 4 million tons of that is the oxide, which goes on the heap leach. 5 million tons a year will go into the mill. Now, when we came up with this process, we were using 1950 gold, and at the time, the oxide heap leach would be paid off, the initial capex would be paid off in the first 3 years, then we'd start building the mill, and that would be paid off in year 6. With the current gold price, the whole initial capex is paid off in about 6 months, and we have all the cash to build the mill in under 3 years. So the project is highly economic. Here's our gold production, and remember, these numbers are based on our existing recoveries, not the new recoveries that we've come up with and will be in our new PEA. So life of mine, we're producing about 1.5 million ounces of gold on an annual basis. On average, we're about 104,000 ounces of gold. Copper, 190,000 tons over the life of mine, 13,500 tons, so about 30 million pounds of copper a year. Now, with our new recoveries and our updated PEA, we expect gold to be closer to 1.6 million ounces life of mine, producing about 110,000 ounces of gold a year, and about 15,000 tons of copper metal, so about 35 million pounds of copper a year. And as I say, those updated numbers should be out in the next couple of weeks. Here's our mining profile. One thing we're doing coming up, and I'll talk about it, we're going to be doing some expansion drilling. And we know where we have some additional higher grade ore. So what we want to do is smooth out our production profile, add to our resources so that we can level this off in here and improve our production profile on the oxides. Gaps, now we're in Nevada. Nevada's got some very big mines, but once you get past the really big mines, it drops down to a lot of smaller mines. So at 104,000 ounces of gold a year on a standalone basis, Gaps would be the 4th largest gold mine, and at 30 million pounds of copper a year, it would be the 3rd largest copper mine. And you put them together, it's a really nice size, mid-size gold copper mine. Operating capital costs, $365 million, that's our initial capex on the left. On the right, our sustaining capital at $555, that's higher than you'd usually see, but that involves building a mill. And as I said, at current metal prices, we have the initial capex paid off in about 6 months, and the the mill construction costs and all that in under 3 years. Operating costs, typical what you'd see for Nevada. With the SART plant, the processing costs and the heap leach are probably about $4 a ton higher than you would have without that, but good economics on the project. So lots of room for improving the project even more. When we update the PEA, the only thing we're bringing in is the updated metallurgy. We have the ability to optimize the mine plan, look at contract mining, other things. We'll do all these things when it comes in to the feasibility study. Now for the results of our phase 3 metallurgy, in addition to increased recoveries, what we also found were better kinetics. So we had 98% of the gold and 90% of the copper recovered in the first 60 days. So because of that, we can do some trade-offs, maybe shrink the size of our leach pads. Again, that'll reduce our capex and make the project even more economic, more robust. Here's our resource. As I mentioned, about 3.5 million ounces in all categories. About 2 million ounces of that is gold, and the remaining 1.5 million ounces of that 3.5 is copper equivalent to gold. And now that's based on our metal prices then. There's lots of room for potential. There's 4 zones of mineralization at the project. All of them remain open. There's also potential to increase the grade of the deposit. So we can see, looking at this project, near surface mineralization, 4 to 5 million ounces gold equivalent, with more at depth. So lots of potential. to increase the size of GABs beyond what we're at today. Plans for 2025 and into 2026, as I mentioned, we're fully funded through feasibility. So we're currently, we'll start drilling to infill and expansion drilling is going to commence in a couple of weeks. We're going to expect to get our water permit this year, and we'll get that well drilled so that we can file our mining plan of operations to kick off permitting. We're going to do some, continue our baseline, and what we want to do is we want to get the feasibility kicked off in January. So we're trying to move the project as quickly as we can through to production. This is what it looks like. You can see it's a great place to build a mine, lots of lay down area, lots of ground, flat ground, and there's nothing around here. And so here's our plan scheduled through to production. This is what we're focusing on right now, but we'll start pushing on these things this quarter, and the target is to be in production by before the end of 2028. So that's getting closer, but we feel now that we're fully funded through feasibility study, we can really push hard and advance the project to production. Looking at some comps, this is why we feel we're undervalued. Just to explain this, the gold bars are measured and indicated gold resources. The blue bars are inferred gold resources. We have the grade written just to the left of the bars, and the red dots represent the market cap of the companies in US dollars. So you can see that where we sit in our market cap of 54 million, this was just before we left, it's a little higher today. We're well undervalued compared to these peers. So we expect over the coming months to be able to re-rate. Now that we're funded through feasibility, we'll re-rate, and our market cap's going to be sitting up here somewhere to reflect the value of the company. That's our management team. We've worked together for a long time. We know how to build mines. We've built them in the past, and we're comfortable building a mine in GABs. Management owns 16.9%. We just raised a significant amount of cash, so that brought us down from about 23%. So still significant holders in the company, but we're fully funded, as I mentioned, 210 million outstanding. But if you look at where we feel we should be valued, we still have a lot of room in our share price to run. We were closed at 30 cents yesterday. We think a fair value for our stock is $1 to $2 range. So that's a quick run through of P2 Gold, and I'll end it there. Thank you.